Hello, it's Liam Twigger here, the new Deputy Chair of Argonaut, following the merger between PCF and Argonaut recently announced. It's a fantastic deal, a great value proposition, an improved value proposition for our clients, and we're very excited with the upside and the future and the potential, and proud to be part of the Argonaut family. Introducing the thermometer for the last quarter, I guess highlighting probably the uptick in inflation that we saw in the United States. Inflation 5.4%. That's the highest level of inflation they've seen since 2008. On the back of that, we've seen commodity prices, particularly copper and gold, and iron ore continue to tick upwards, and US gold up at $1,800 an ounce. With the outbreak of further COVID in Australia and around the world, I guess the optimism that embraced the new economies coming out of COVID, the brakes have been applied, and we can see a dampening in potential for future economic growth. And the 10-year Treasury yield, the US Treasury yield, is starting to come down. So we think that's going to look better for gold prices going forward. The other great uncorrelated asset that's probably having its Waterloo is Bitcoin and the cryptocurrencies. They've been incredibly volatile, the most volatile asset class in the world. This time last year, Bitcoin was $9,000 a coin. In April this year, it was $63,000 a coin, and now it's $32,000 a coin. I mean, to try and pick the directions is very tough, but they've been clamped down, all of the cryptos, by the regulators. And the regulators have now, in fact, got their own digital currency, which can trade through the blockchain and is a real competitor to the crypto coins. And I think the crypto coins still have a future, but it's going to be the ones that can meet the transparency that the regulators require. So if a buyer is selling a coin to another party, sure, it goes via the blockchain, doesn't go through the intermediaries, but the regulators want to see who's on both sides of the deal. And the one that can provide that probably is the one that wins. In terms of notable transactions, we saw Regis make an acquisition of a 30% interest in Tropicana, and they paid $852 a reserve ounce, which was a sort of record price. The long-term average for what companies pay for operating mines on a reserve ounce basis is about $273 an ounce. So a nice premium there, good for the seller, but also recognises the scarcity of these opportunities. And people are paying close to the NPV on the basis that they can come up with further discoveries. And then just yesterday, we saw Evolution announce the acquisition of Kundana from Northern Star, and they paid $511 a reserve ounce, which again, a good premium to the $273 that we've seen as the historic average, and potentially the full NPV value for the Kundana project that maybe Northern Star had. But clearly there's upside there for Evolution. And the message that I see is probably good deals for all companies, but it shows a tightening of the market. And now is a very good time. If you're looking to deal a gold project, I think you'll get maximum value. That's all from me. I'll see you next time. Thank you so much.